advantage to the bulls, but the bears are still around. Oh man, is Bitcoin gearing up for its next leg up? Markets are still feeling quite euphoric with fear and greed climbing into neutral territory. Or are the bears sitting at this key level, which I'm going to share with you, waiting to snipe eager bulls on their next trade entry? In this video, I'm going to share with you my exact price levels I think Bitcoin is working through. Where are the support? Where are the resistances? And more importantly, where am I going to enter my next big trade? Make sure you smash up likes. Don't forget to subscribe. If you're looking for an exchange, check out the links in the description. BYBIT and BitGet are the two exchanges I'm currently using to trade. Bitcoin is forming this bullish continuation pattern, and we've been monitoring this since yesterday. We covered this off. We had a big move here up to the upside over Saturday, Sunday, and Monday. We've been accumulating in here, and we've opened up Tuesday slightly down here on the market, down 0.38, but more in focus right now is this pattern. Every time we've risen to the top, the bears have stepped up and pushed us back down to the downside. We've then rallied, they pushed us back down, rally, and again last night they push us down. But look at this leg, very interesting here. On the last push down by the bears, they only just managed to wick us. You can see it was intra candle here. The wick pushed us all the way to the bottom of the channel. So it wasn't a proper push down like they did this time. So this is an indication, just by reading the candlesticks, guys, no fancy indicators, nothing. This is an indication that the bears are weakening slightly here. If you want to corroborate that, take a look at the volume candles. The volume candles by the bears to the downside are very minuscule. They're not great volume candles. Okay, so this is something to keep an eye on as well. Now, this time around when we got pushed down, we're just hovering here in the middle of the channel, which shows us that this is all to play for, but the bias and the advantage is with the bulls. Now, why would the advantage be with the bulls? Well, the bulls did all this effort. The bulls made a tremendous move here to the upside, and then they've been consolidating in an upwards bull flag. It's not even a downward sloping one, right? Because you can also consolidate like this and then have another breakout to the upside. But this is actually upward sloping. So this is a tremendous consolidation here by the bulls, and just goes to show how much strength they've got. More importantly, where is the price action right now? The price action initially, when you were in this bullish continuation pattern, was below the blue line. That blue line at just shy of 21,000 is the 2017 bull market high. So it's a very important support and resistance level. Now, initially we were beneath it, we got above it, thrown back below it, gone back above it. Now look, we're decently above it right now. So hopefully we can hold it as support. So the next time we come down, can we build that support, and off we go for our move to the upside? Now, a lot of you will be screaming, what is the price target from this move? Well, there's a few different ways to do it. I'm going to go with a moderately conservative one, because technically you could call the whole move this and measure it something like that. But I'm going to go with it a little bit more modestly. And what I'm going to say is I'm going to take it from this pivot point here and say that was our move. I'm also going to be extra conservative and apply this move to the bottom of the move. So I'm going to assume we come to the bottom here and then start our impulsive move to the upside. And when you apply it like that, you bring yourself to a target of around 23. Now, arguably, you can say 23.5, you can say 24, but a nice conservative target on this type of a move, I will set my personal price target of 23. And again, not financial advice. This is trading, guys. You win some, you lose some. Some of the best traders in the world I know lose more trades than they win. Why do people not understand this? But their risk management is stacked in the favor that their P&L looks very different to somebody who wins more trades but loses some big ones, okay? So it's all about risk management here. What do you choose? How much of your account size do you risk? We've covered this all in past videos. If you want to know more, ijaz.uk/member. Also check out the free TA course. Link is in the description. A lot of people saying it's not free. It's completely free. It's hosted by Skillshare, okay? It's on Skillshare. You sign up, and then you get 30 days access to it for free, but you can keep cancelling and subscribing and keep watching it for free. It's absolutely free, so I don't know what you guys are complaining about. I'm not charging you thousands of dollars for that course. That's what I'm watching here. Now, what would a good breakout look like? Well, a nice healthy breakout will be good volume candle above this channel. Okay, so we want to see good volume, but also I want to see confirmation. So on the first candle that starts to print, everybody gets excited. Oftentimes you get this really big candle pushing through and it looks like you're off. In fact, here's a great example. Look at that one there. A lot of people have been excited there, broke through the channel, off we go, and then you get this big topping wick. So you can see the wick on the candle is just the bears pushing you back down and saying, nope, we're shorting from here. So be very careful on the breakout. Bears will be shorting like snipers up here. Okay, That's where they're positioning themselves in the trenches. So for me, I want to see a clean breakthrough. Ideally, I'd like to wait for confirmation, which is another green candle posted after a green candle close. So this one would have to green candle close out of the frame. So imagine if this candle closed, right, with the body closing above. Then I want to see the next one open up green. That's when I like to enter, assuming volume is nice and decent on the breakout as well. I want to see decent volume uplift when you're breaking through this line. It's got to be significant enough that I notice it, okay? It can't just be like the rest of these, then I'm going to get a little bit disappointed. Okay, that's our bullish scenario. Now, I don't want to write off the bears. The bears are still alive, but they're very, very weak. And that's very important, guys. Like right now, I've been very disappointed after this huge move in Bitcoin. Everybody was almost expecting a pullback, right? Like after a crazy move like that, you would expect a decent pullback. And everybody was waiting for retracements. Do we come back down to 20 down here? Do we even come back even lower to the top of the reversal pattern, which we formed at 17,800? Nothing so far. Right? And but that's a double-edged sword, because that's now making people think that the bears don't exist, which is obviously untrue. There are loads of bears, but the question is, where have they retreated to? And it looks like they're trying to snipe from this level, but we don't know how much energy they got left, because they have got wrecked in the lead up here. So bears do know better than to short when Bitcoin is having its crazy move, and chances are some of them may have ducked out right now. But we do need to look at the bearish divergence. We have higher highs on the uptrend. So in this bull flag, we have an uptrend. In the RSI, however, which is your stochastic RSI, you are seeing, which is your indicator of oversold or overbought, you are seeing a downtrend. You're seeing lower highs. This is something called bearish divergence. I shared that with you yesterday. Again, if you don't know what this is, ijaz.uk/TA, we cover all the different types of divergences, so this will make sense to you and you'll be able to start spotting it yourself before others tell you about it. Now, when this happens, the chances of you moving sideways or down increases. In other words, this starts to tell you that the momentum to the upside is starting to curl over, so maybe expect something like that. Okay, that's just the RSI. So we got to take that with a pinch of salt. We've got to be very, very careful. That's one of the reasons I'm not just sat in a trade right now. That's why I've taken my profits and I've just let this bit do its thing. And then I want to see when is the next move, and I want to catch that next move for a trading perspective. Remember, a lot of new people on this channel will be confused. My long-term portfolio doesn't get touched. The majority of my crypto portfolio is in long-term holds. It doesn't get touched. I'm talking about a small bit, which I use to trade for the short-term trades, okay? Let's take a look at the different time frames, because I do want to share with you the EMA ribbon. So on the hourly, beautiful, right? Look at that, how we're riding the EMA ribbon. This is what I mean by the bears not having any strength. I'm very surprised that at least on the hourly, they've not managed to flip and take the hourly back, at least for a handful of hours. They've just not. We've been able to ride on this hourly ribbon this whole way. Okay, let's now notch that up to the 4 hourly. And on the 4 hourly, hugely extended. This is a very bullish 4 hourly trend, right? Even in the consolidation, we've not had to touch the EMA ribbon. Insane. Let's now move up to the daily. Gets even crazier, right? We've not come anywhere down. We can have this movement down here on Bitcoin all the way down to 18,600 and still be in a bullish daily uptrend. So this is perfectly healthy. Any retracement down here, 20,000, 19.5, 18.5, all the way down here to 18,000, sorry, all the way down to 18,600 is good, right? That's fine. There's no issues, right? We've held the uptrend here, which is good. Now let's go up to the weekly. And this is where you have to respect the bears. You don't have to respect the bears on any of the other time frames I've just showed you. But on this time frame, you cannot assume that the bears are asleep, because they still own this trend. And this is the final trend we need to take from them. And we're still a decent couple of moves away from doing that. A close above 26,000, a weekly candle close above that. And then we can say, bears, we disrespect you. We own the trend. You guys are getting wrecked, and we're going to have our next move at least sideways / working our way into the next bull cycle. But right now, that's not where we are. Yes, we've made a good move. It's the first time we've gone and tested the weekly EMA ribbon from the bottom side since March 2022. Okay, so almost a year. But we're going in, we're testing it, and now we need to see if the bears step up. Are they going to take it lightly and just let us take over this EMA ribbon? Or are they going to start shorting and pushing us to the downside from this EMA ribbon? Very important. Now remember, I do want to cover this off. The market is not pricing in any room for error. And I do need to explain this, because a lot of people are seeing this euphoria, and the euphoria is right. Yeah, there's nothing wrong with the euphoria, because the inflation readings did improve. But you have to remember who's on the other side of the gambit, and that's Jerome Powell. And Jerome Powell's got the job of, in about 14 days' time, coming out and giving us his reading on interest rate hikes. And the majority of market are expecting 25 basis points. 30+% still of the market is still expecting a pause. Jerome Powell does not want this financial market to run too soon. He just fundamentally does not. So it's in his interest, even if his target rate, even if he gives 25 basis points, it's in his interest to come out and talk the market down. He's going to talk dirty to the market and make the market upset. He doesn't want them prematurely running. He's made that clear. So we've got to be very careful. We can't just get excited and say, oh, the market's perfectly fine now. We're far from it. We can enjoy the relief rally. We can take those trades. But long-term perspective, let's remember, where are we in this cycle? Yes, the cycle has started to improve. And this is what I want everybody to understand. The cycle has indeed started to improve. We have seen inflation come down. We've seen some improvements. But let's not get overexcited. And when I measure overexcitement, I look at this and I see that the fear and greed index is sitting at 51. That means neutral. I understand why people are excited right now, but this should not be neutral. We're still heading into a complicated Q1 and Q2 with potentially a recession in Q3, Q4. Hopefully mild. All the data is suggesting it could be mild, but it's still there. We shouldn't be super excited right now. Okay, so that's really important. Just wanted to make sure everybody understood the context of what we're in. We're enjoying a nice relief rally right now. We can take good, interesting trades, but on the weekly time frame, you can see there's still resistance ahead. From a global macro perspective, we have no room to get this wrong. So we've got to be very careful. I don't want everybody to just be gung-ho, going into the FOMC meeting, really excited, oh, we can't do any wrong. But the market is priced in no room for error. Like, he has to come in with the 25 basis points. If he comes in with 50 basis points, the markets will be red. We've got company earnings today. JP Morgan, Morgan Stanley, United Airlines. Markets are going to be looking at that. Okay, and it's a double-edged sword because the markets doesn't want the companies to be doing terribly badly, but they don't want the earnings to come in good either. They want the economy to contract, just like inflation is showing. The economy is contracting. They need it to contract so Jerome Powell doesn't have to do it for the economy. If the economy is doing it to itself, Jerome Powell doesn't have to do it with increases in interest rates. So that's where we're sitting right now. Let's now jump back over to the dollar index because this is the important part of the matter. And when you look at the dollar index, you can see we are getting that nice trend to the downside. So overall, this is good. But remember, if Jerome Powell pivots, if he flip-flops, the dollar index will bounce back with vengeance. Do not think that it cannot just suddenly start claiming back its weekly EMA ribbon. It can. And it will be firmly based on whether Jerome Powell pivots. If Jerome Powell does 50 basis points, if he starts saying, no, I need to start tightening again, this will go back quickly, back up, and potentially eclipse that high. So we've got to be very careful. We need this sustained downtrend. We need the expectations of the market to continue to show that we're contracting, and we need Jerome Powell to be comfortable with that. Give us 25 basis points, maybe another 25 basis points even meeting after that, and then eventually get us to pause. And that is the good cycle. And then if we can see that, maybe hold at that rate for the next year, then maybe by Q1 next year or even the end of this year, maybe we get our first rate cut. And that's what we're working towards. And when that happens, end of this year, early next year, things could really get exciting. That's where my mind will start to think about the next bull cycle. For now, I'm thinking about a relief rally. Can we hold? Can we start bottoming out? Then can we get some sideways action? And then when the monetary policy environment gets better, can we start thinking about our next bull cycle? Hugely important days here in the market. If you're trading it, it's hugely exciting. If you're new to crypto, this is what the exciting days look like. A lot of FOMO, a lot of greed, a lot of excitement, playing with your psychology. You've got to be patient, be data-led, manage your psychology, keep learning. If you haven't gone through my TA course, ijaz.uk/TA, one thing people can't take away from you is education, is knowledge. Okay, so learn that knowledge, make sure you're armed with the indicators, with the tools, with the insights, with the patterns, so you can spot them when you're trading. You don't want to be in a trade, losing money or making money only to think, if only I just learned that trade would have been far more better for me. Thanks for watching, guys. Don't forget to smash up likes. Don't forget to subscribe. Check out this video here, and I'll see you in the next one.